Hi, Assalamualaikum warahmatullahi wabarakatuh. My name is Ahmad Muaz Fitri Ahmad, and I'm the first presenter of this team, and I would like to present about our accounting project, which is about Chocolatenest company. So the first member of this company, which is me, Ahmad Muaz Fitri Ahmad. The second is Nurul Husna Binti Idrus. The third, Mariatul Binti Syfull Hyzam. The fourth, Ammar bin Hamzah. And the fifth, Aqilah Natasha Binti Kamis. And to present our organization chart, the head of the company will be the director, and the director is me. And below me, there's one chief financial officer, which is Mr. Ammar bin Hamzah, and below him there are three executive directors. The first one is Nurul Husna Binti Idrus, Mariatul Binti Syfull Hyzam, and Aqilah Natasha Binti Kamis.
Okay, next we go to the next slide, which is company's profit. Okay. Our company's name is Chocolatenest. Our owner's name is Ahmad Muaz Fitri bin Ahmad. This is our address, and our type of business is partnership. Accounting period is 1 month, which is 1st April until 30 April 2020. We start our business with capital stock 130,400 ringgit, and we have 5 labor, and we just start our business, means this our first time business. Okay, next we go to the next slide. We start up our business with equipment 5,000, machinery 30,000, work in process 400, brooding 50,000, and lastly cash 80,000. So the total is 130,400 ringgit. Thank you.
Hi, my name is Muhammad Ammar bin Hamzah, and my matrix number is 9190446. I would like to present for our presentation about the accounting project. My part is for the slide number 5 and 6. So we're going to start with slide number 5. So slide number 5 is about statement of comprehensive income for our company, Chocolatenest, for the month ended April 30, 2020. So we get the sales 42,900 minus with cost of goods sold 17,160, and we get the gross margin 25,740. So after that we minus with the operating expenses. Wages expense 4,500, utilities expense 460, advertisement expense 500, rent expense 3,750, renovation expense 5,000, administrative expenses 4,000, and the total expenses is 18,210. So we get the net income is 7,530. So we're going to slide number 6. Slide number 6 is about balance sheet for the month ended April 30, 2020 for our company Chocolatenest. So we start with non-current assets. Non-current assets have building 15,000, machinery 30,000, equipment 5,000, raw material 22,930, and work in process 3,000. So the total non-current asset is 75,930. And then we going to current asset. Current asset have cash 32,316, finished goods 10,920, account receivable 39,334. So the total current asset is 82,570. So we plus 8, so we get the total assets is 158,500. So we're going to liability. Liability have a wages payable 8,640, account payable 9,930. So the total liability is 18,570. And then we're going to equity. We have a capital stock 132,000 132,400, and the return earning is 7,530. So we get the total equity is 139,930. So the total liability and equity is 158,500. So it equals with the total assets with the amount is 158,500. So our company balance sheet for our company is balanced. So that's all from me. Thank you.
Okay, so we move to break-even analysis. Okay, we have three, which is fixed cost, variable cost, and contribution margin. So for fixed cost, we have administrative expense 500, rent expense 3,750, administrative expense 4,000, wages and salaries 4,500, and utilities expense 460. So total of the fixed cost is 13,210. So for variable cost, we have three, which is direct materials 20,000, direct labor 7,500, and manufacturing overhead 1,400. So total variable cost is 28,900 ringgit. So for contribution margin, total contribution margin we get by total sales minus with the total variable cost. So we took 42,900 minus 28,900. So we get 14,000 for total contribution margin. So for contribution margin per unit, we took unit sales price minus with unit variable cost, which is 3 ringgit, minus with 28,900 divided by 42,900. So we get 2.4 for contribution margin per unit. So contribution margin ratio, we took unit contribution margin divided by unit sales price times 100. So we get 2.4 divided by 3 ringgit times 100%. So we get 0.8 or 80% for contribution margin ratio. Then next, we move to sales volume graph. We have three lines representing total cost, total revenue, and total fixed cost line. So as we can see here, the total revenue line is the highest at 42,900 ringgit. The second one is the total cost line, which is 21,610, and the last one is the total fixed cost line, which is 13,210, which we get from earlier. So the intersection between the total cost and total revenue line here is the break-even point. So above the break-even point is the area of the profit, and the lower beyond the break-even point is the loss. So basically, the profit area is the area that above the fixed cost line, which is here until here. But the total, the target profit area is the one that beyond the total cost line, which is here. Okay, so that's all for the sales volume graph. Thank you. Okay.
Proceed to break-even calculation. We have calculate contribution margin and make the graph. So, to find the break-even for unit, is we have to divide total fixed cost with unit contribution margin, which is we have total fixed cost total to 13,210 divided by 2.4. We get 5,504 units. So now we find for the break-even sales revenue to find in RM. So we find the product between break-even units and unit sales price. So we have to multiply with 5,504 with 3 ringgit. So we get 16,512 ringgit Malaysia. For a job to be considered profitable, it must generate enough gross profit to break it down. The revenue you receive from the job should be sufficient to cover the job expense. Whether this business will be as profitable? Yes. it will be profitable because we already tried our best to minimize the cost and maximize the profit. In our break-even analysis, our break-even sales is 16,512 ringgit Malaysia, while our revenue is 42,900. The range between break-even and our revenue is quite big, so it's hard for us to gain loss. So, for our business to be profitable, the gross profit from all active jobs must be sufficient to cover your overhead expense. So, the expense can affect your net operating income too. Like we have renovation expense, and we have 42,900 right, as sales revenue, but after we subtract with expenses and whatever, we get net operating income total to 7,520, I guess. So, however, to improve the possible outcome, we will be consistent in maintain and develop the quality of our product. We also plan to make and good implementation to allocate our resources efficiently. So, that is our presentation. Thank you very much. Assalamualaikum.